My name is Katja Schult. I'm partner at IMAP Germany with focus on automotive and industrials.
My name is Henning Graw. I'm a managing partner at IMAP Germany. Katja and I are talking about four major factors which affect M&A activities in 2024 in the industrial sector. In general, in 2023 we have seen a lot of headwinds in the industrial sector. This was mainly due to the interest rate development. This was due to geographical instability all over the globe and raising costs or cost pressure on the corporates, such as energy costs, labor costs, and material costs. And basically, however, we have seen an increase despite this development in terms of deal volume in 2023 of almost 15% compared to 2022. So we did not reach 2021 level, which was a record high, but the development was quite positive in 2023 in the industrial sector. We believe that there are many positive influences. So the interest rates trend is positive. There is a high appetite and a lot of money in the market, especially private equity is coming back in both terms. In terms of selling businesses, they were 2023 a little bit calmer, but they have a limited holding period. So we believe that 2024 more PE exits will come onto the market. And on the other side, during the last month, we have seen more the trade buyers, which have the main advantage that they do not depend on external financing, and they have a huge advantage against the private equity firms during the last year. But on the other hand, since the interest rates are developing positively, so to speak, I believe that private equity will be back on the negotiation table in 2024, of course.
We see still many reasons that the amount of M&A transactions will increase. As we are in a fast-moving environment and we face a lot of regulatory challenges as well as disruptive technologies, companies are reconsidering their business model and strategy, which will also lead to new M&A strategies. So talking about disruptive technologies and what kind of M&A transactions we see, companies are looking for tech-enabling targets to follow up on innovations. Especially in the German automotive sector, the suppliers face the regulatory changes and also the expectations from the OEMs to move their business model from combustion engine to electrical engines, and therefore companies have to reconsider their strategies and also develop either new products or buy firms to expand their portfolio.
Yeah, on the other hand, those companies who use more traditional technologies, especially in the mechanical and plant engineering, they are currently struggling. They are highly affected by the poly crisis of the last years, and they have skid marks in their balance sheets. And this, on the other hand, we see more struggling banking situations, so banking pressure on the corporates, which we believe will increase distressed M&A on the one side, and on the other side more carve-out transactions in 2024.
And furthermore, we will see in favor of small and mid-cap sized firms more transactions, also due to the fact that high interest rates have impact on deal value. And furthermore, we assume investors' appetite from foreign investors, example from the US, China and Japan.
The other driver of higher deal activity, especially in Germany, there are a lot of unresolved corporate successions. There is, according to a statistic, 200,000 unresolved corporate successions until 2026 to solve. I mean, this is a huge potential for M&A advisors, of course. Not every entrepreneur will take an advisor, and we talk about really small companies. But overall, this really will drive M&A activity, especially in the traditional industrial sector in Germany. This is more specific to Germany because we have the typical German Mittelstand. I mean, this is something which is quite unique in Europe. So we have this family-driven companies, machine building companies, 20, 30 million in terms of sales. Third generation, so the son, the daughter don't want to continue the business. And they want to sell or need to sell the business. So you will see in 2024 more technological driven M&A deals in the industrial sector, either for sake of survival or that you have the technology which is needed to enter and to access new markets. And when you talk about automation, intralogistic, robotic, you are quite close to technology. So this is then more the tech sector, and this is the interface, and then it's kind of getting interesting. Because the funny thing is then it's not in industrial sector anymore, then it's tech industrial, then it's more tech deals, and then you come up to probably double-digit multiples sometimes.
And I mean, that's right now the interesting part, because we right now see cross, not border, but cross-industrial transactions. So automotive suppliers acquiring software companies, or consumer companies entering into e-commerce. So we have right now cross-industry transactions.
Along the value chain, absolutely. The implication of cross the industry transactions is diversification, of course. So to diversify the portfolio and to complete the value chain, and finally to increase profit margin.
And also to provide full services to its customers, right? So once you are acquiring a car, you would like also to ensure that GPS and every electronic function is providing a service that might be out of one hand. In terms of valuation, we think that the industrial sector will recover, but not all at once. So it is still a very target-specific topic, and it's very volatile, the valuation. But nevertheless, there are industries which are a specific thing, such as telecommunication or infrastructure, where the valuation actually increases.
Yeah, and on the other hand, in the traditional markets like automotive suppliers in the industrial sector, which supply parts for the combustion engine, we don't believe that the multiples will go up again. They will stay at the 3 to maybe 4 times EBITDA on the combustion part of the business. So in these markets, I don't believe that valuation multiples will go up. On the other side, when you find the right buyer who wants to expand this business, and for example, last man standing strategies, they are probably willing to pay a strategic premium. The industrial sector is split in the old technology-driven companies and the what we call new technologies, AI, robotic, sensoric, and so on and so forth. So and these are high-value transactions, and the other ones are, let's say, low-value transactions. And those who use the old economy or the old technologies, it's more about survival and docking on to larger corporates. And this is for being able to survive in the markets. And the other ones are the targets because the larger corporates want the access to this new technology. In terms of outlook, we remain positive for the rest of the year.
I agree to Henning, and that we remain positive for 2024. And in fact, IMAP closed over 171 transactions in the last 5 years in the industrial segment.